Were you aware that if you pass away owning US stocks as a non-US citizen, your family could face up to 40% in death taxes before they can inherit them? In this video, I'll explain how US estate tax applies to expats or international investors holding US shares and share simple yet effective ways to ensure Uncle Sam doesn't take a significant portion of your wealth. Before I dive in, welcome back to my channel. My name is Niall Grandison. I'm an investment advisor based in the UAE, working with high net worth individuals globally, spanning over 30 countries. If you're interested in staying up to date on investing, tax planning, and citizenship or residency schemes, do consider subscribing. Now, back to US estate tax. Many expats I work with hold substantial shares in major US companies such as Amazon, Alphabet, Meta, and many more of the high-performing tech stocks. These shares have often been acquired or accumulated through platforms, banks, or company share schemes. And while they've delivered phenomenal returns over the years, they do come with hidden risks in the form of inheritance tax. To explain what the US estate tax is, simply put, it's a tax applied on death to US cited assets, including shares in US companies. For US citizens, there's a generous tax-free threshold of nearly 30 million. However, for non-US citizens, the actual official terminology are non-resident aliens. That's what they're referred to as. So essentially, if you're a non-US citizen, the exemption is shockingly low. It's just $60,000. Anything above that, you can get taxed at rates of up to 40%. To give an example, let's take James, a non-US citizen, who holds 1 million worth of Amazon shares through his broker. When James passes away, his wife Jane logs into the account only to find that it is frozen. After consulting her solicitor, she's informed that $400,000 must be paid in estate tax, and that's even before probate can begin. This is a kind of nightmare scenario families could face without the proper planning in place. Now, why this happens is because the IRS, who is US's tax authority, looks through structures like platforms or brokers and treats the asset as directly owned by the individual, making it subject to estate tax. This is why it becomes a financial blind spot for many expats, because it's not a tangible asset. So of course, you wouldn't expect it to be taxed over there. Fortunately, there are several ways to avoid this tax. One is trust planning. Another one is switching to collective funds. So instead of holding individual US shares, you could always liquidate those and purchase an ETF, such as the NASDAQ 100 fund, which would still provide the exposure to those high-performing US tech stocks without triggering estate tax on death. Just ensure that if you do take that route, the fund is domiciled outside of the US and held in a jurisdiction like Luxembourg or Ireland, for example. So just a jurisdiction outside of the US. My preferred route is offshore bonds. That involves transferring your US stocks into an offshore bond. These are typically based in neutral jurisdictions like Jersey, Guernsey, or the Isle of Man. With an insurance bond, the assets are owned by the insurance company. So the IRS view that owned by the insurance company, so the estate tax wouldn't apply to you. You can benefit from that while not forfeiting the right to actually control those assets. So within an offshore insurance bond, you can still hold all of those shares. Everything gets treated the same, except it completely bypasses US estate tax while you're ensuring you maintain control of the investments. And if it's structured correctly by the correct advisor, it can be very cost effective as well. So that's it from me, a very, very short and sweet video on the topic of US estate tax. I hope this served as a useful overview. If you have any questions, feel free to get in touch. I would suggest the first step is, if you have your own advisor, get in touch with them to establish whether or not this would apply to you. I would suggest anybody who has a significant amount in US tech stocks or US stocks in general, and is a non-US citizen, regardless of your location, should do that. If you would like any guidance from me, as I mentioned, my contact details will be on the screen. Thanks for watching, and just finally, don't forget to like and subscribe, and I'll see you in the next video. Thank you.